Hello and welcome. This is the completion of the first day of March 2020. My name is Derek. This is the Money Charts channel. All bets, trades of the like. Well, that's within each's own risk and their own reward. As we head into another week, and last week was most certainly that of a volatile week, as it started off in here within the 18 average of highs, but exitation of the 18 average of lows. And now since the most significant decline that day, down 5.65%, the market has been in this really descending, whatever name you want to give it. But it's not going sideways this way. It's not going sideways that way. It's most certainly not having any type of V-shaped bounces. In fact, it's doing the opposite of this, as we can see in here. Does this set up for further decline? Quite possibly. If we take a look at this on the single hour term, how has this fared in holding support? How has this fared as far as breaking out? This level of support we can see, well, from this move in here, had many at once, but hit down here, hit the highs, and then it broke down below it, thus changing that key level. An attempt in this stage in here, February 27th morning, to break out, and unable to really do so. Here's your exitation above it, just not doing it. Hitting the 18 average of highs, coming back down and supporting previous low. Appears below it here on the 7-hour timestamp, February 28th, but it did have that V-shaped period here. Comes back down, supports it again, 12 o'clock, February 28th. Supports it again, February 29th at nighttime, 7 p.m. Now it comes back down again this morning, 11 o'clock. It goes below it. We resist it from 1400 hours, but we break out just recently, and now we've been supporting it again, still while being in that 18 average and having one period at 7 o'clock this morning and breaking out, but doing nothing there after that. So then it's a descending triangle. We can, I'm not going to draw the most straightest of lines, but hey, that's pretty good considering how bad it usually is. We're in that pattern. Usually these things do resolve themselves within the path of least resistance. Right now this trend is going lower on this 1 hour term time frame. So the likelihood of how this is going to break either to a significant leg lower or a significant leg higher, I would have to think more favors right now a play towards the downside. And in going back to the daily chart and looking at this thing more clearly, is this, question mark, setting up an inverted head and shoulders pattern? If it does, there's a lot of people that are going to be talking about it because it's an obvious C as far as viewing of it. There's this would be the left shoulder, and then we come back down and do this. This would be the head. And given that the neckline here, as I talked about the 77, so the slot machine handle, if you have another leg lower, that's probably maybe an area you think, okay, that looks like where it would go breaking this descending triangle. And if it does bottom, and then you get back up to this neckline, you'd have the right first point of the inverted head and shoulders pattern. And on a situation of breaking the neckline, I know what a lot of people like to do, or what I was taught, is you take the distance of this move, and really what the rate of ascent is. You went from 6,600 to a neckline of like 10,500. So for me, I look at the difference. That's almost 4,000 on 66. That's better than 50%. So that's what I'd be expecting on a break of resistance. Better than a 50% move, which would take us to a pierce below previous high at around the 1718. And that's just a target level as it is. And on the way getting there, I'm going to be looking at this previous level of high, with combined in this as where it would be going on the first spot of the breakout. For if it manages to make a move breaking the neckline of around 10,000 low change, 10.5 or so, and then maybe comes back to this, and then that could be maybe one of the methods it gets or takes to get to such a level. And that's, of course, if it even does such this example. Now let's move on to Ethereum. And this is what it looks like against the US dollar. Right now we got the same sort of deal from these down days here that left in here. And such a beautiful run this was. 121 up to 286. A little bit better than double. Just for the year. Just for the year. And of course, if we look back and we can see that, well, at one point, this is a $1,400 coin. And it finished 28 under 100, so it's still, well, noticeably better than double and close to triple, and it was over triple before it broke down below from, of course, that $80 low. If you're looking for key Fibonacci levels, well, I could just quickly bring up my calculator and see one from this high, so 1400, and then we'll go like, say, 80. Those are just good even numbers to use. I'll type the two numbers in and just see what the numbers will give me. So 239 and 469, I'm guessing, might be key relevant numbers. So 239, which was a level, it got above it and it's been resisting it again. Just by chance, was 23.6 near 151. 157, yeah, of course, a bit above it. Makes sense. Yeah, 157, that's a better number anyway. So therefore, breaking this level of resistance, if it does it, and of course right now it's looking to break down after having a noticeable lower high from this point. Well, if it breaks above it, then we do, it's going to be like 469 and probably like 500. That would be where the next leg higher would be, because I usually pierce extra. But for now, I got two ways of considering Fibonacci. Number one, from this low to this high, as well as from this low and this high. So we have 366. We'll put in the 0.5, and these are all going to be 366.5, and in here again this was like 81. So just 206, 145 is key numbers. So 206 most certainly. Yeah, no, it really hasn't played it yet in here. This low is 210, piercing above. Okay, let's go back to first one. So the high here of yeah, no, this one here, this one and this one. That's the one I want. So 285 and 118. Okay, so 231, 203 on the way down. Oh wow, okay. Within it, it did not support 231 really much at all. Let me just put a line on that level because that's the first time it approached that price target level. And we can see when it comes down to it here that instead of supporting it, it has been resisting it. It resisted it pretty much right from the get-go. We had only a little bit of support here at 7 o'clock on the hourly time frame. So we can see that it was at the low, it bounced up to the 18 highs on it, and then it just broke down below it, resisting it once, resisting it so on 3 different consecutive periods, and then 2 periods later, then resisting it at 9 o'clock, resisting it at 10 o'clock, breaking it above it, but only for about 5 or so periods, breaking down below it, resisting it, and trying to get there at 7 o'clock on March the 1st this morning, not quite, so they're getting it above it. That again would be yet another resistance test. We are, however, seeing this on a major downtrend. Because I've been seeing this resisting this key level, this is really indicating to me that we should probably come down further and probably pierce below the next key level of 203 with 165 in there after that as the next possible level. So 203, we're looking at roughly around in here. That's, yeah, that would be, I would still expect a more decent pierce, but the possibility that there could be wild moves and it goes to 165, that would be a higher low. That's pretty much in the must hold areas as well too, but it does look to me as if this thing moving forward is going to be more risky. It's going to be a risky play, and thus a downside potential. With that being said, we can see that this little breakdown in here at 11:45 this morning, what has it done since after making these lows? It comes up to the 18, so opportunity through here to break down, it never did. And now the excitation to try to change this thing is what this statement is. From that point on, it established this level of resistance, so it managed the first step in that attempt. The next step is to correct, and we can see right now it has once and even just now came back to where it came from. It's been a nice serious attempt because it did so at 1700 hours. That's it's 4 per hour. We're finishing 8. So let's put a 7. No, it's not 20 hours. So I was going to say it's more than that. So like over a dozen periods. So if it gets up above here, it looks very, on the short term, this looks like a good setup. So a situation like this, if you're a day trader, maybe there's spots like on Binance where you can do like the Ethereum bull. Or maybe it's breaking down. You want to short this. They got the Ethereum bear markets. So when we put this into, and there's other one. I think there's, just put this in crypto. We have like bull. Bullshit. Interesting. I like this one. I don't even know what this is. It's on Crypto FTX. I want to take a look at it, but the shitcoin index. I want to know what these ones are. A 3x long. I don't know what this. Pretty cool. Whatever. I mean, it's volatility 500 to like 3600. Okay, let's look at. Yeah, see, they got the Ethereum bear. This is the one that I'm looking at here. And whether you choose the, there's FTX exchange with the Binance. So whether you choose, you want to use a Binance US dollar, which is, I just learned about the BUSD several days ago. Or you got the Tether. They're pretty much going to show the exact same chart. But on the bear fund, and there's a bull fund as well, but we can see here just like nice little bullish type of look towards this daily time frame. We were in this downtrend. Now we had the price get above, and we've just had a lot of this. Now it's an ascending triangle. When we look at it from this point of view, and when we look at this on some other time frames, say on the single hour term, there we can see it just having all of these different, the bull market, all these attempts to get above and here. A little bit of attempt to break this one down, and as I was showing in the 15-minute time frame, this is the reverse here. If this falls down below here, then it would be a decent size move. Now, these things are designed sort of like the Direxion ETFs that are like extra leverage, because that's what these are. They're like 3x funds that you are going to be getting long-term. Holding these is just something you don't do. These are basically day trading, short-term, intermediate-term time frame vehicles. Things you'd want to hold for several minutes, hours, or a few days, I would think. You can see in here, I'm looking at this on, say, an 8-hour term time frame, that so far, if you were to be buying this at 12, you're at 19. You could have bought this at February 25th or whatever. If you're still in this, maybe you got your risk reward play, or you're setting up stops here and there or whatever, and so far it's fine. Or you don't see yet it's breaking down, and you still want to hold, waiting for, I want to sell this maybe at 29 or whatever your strategies happens to be. Then so Ethereum bull would be the one I'd be looking at. Like there's a 3x one here, and I think these are 3x2 as well. And this one, of course, would be in the breakdown stage right now. And switching over to Bitcoin dominance, which we've had this breakdown which occurred, but now we've had, since we came in this 18 average, we got up to it on February the 16th, and it never broke down. It held the support that it established at around 63 3/4. And then on the second day of moving up on February the 25th, gets to what's now a new flat 18, because it was declining, and then it has the breakout, and we can see almost a symmetrical kind of triangle on this one, as we have this uptrend within the 18 highs and a little bit of a downtrend as well, as it tries to attempt to end this down move and really resume what has been an uptrend from these 2018 lows. And in doing so, because it's had already this type of a decline, its next step is to just get back to where it came from within this little key area, if this is able to do it, and get above these short-term established levels of resistance. In its attempt, and in any time a market has an attempt, when it's in, say in this case, a downtrend, and reverse for uptrends, and it has this attempt to break out like this, and if it does fail, 18 average of lows is always what I'm going to be looking. Does it coincide with a key previous area? Most certainly it would. So really holding around the 64 area, must hold 63 high change even. If it see weakness and falling down below because it had this type of attempt, whenever you see that happen in market, that can oftentimes indicate that that's a failed move, and oftentimes you're going to get a really concise move in the opposite direction from that of a failed move. All right, now let's take a look at the metals. Gold up 9.9%. Well, first when I looked at it, it was pretty much even. Then it was up a little bit. Then it was up 9. Silver was down a bit. Then it was doing better, and it's probably doing okay. You're going to see the 1 minute time frame. This thing is just soaring, I believe. We can see on the daily chart how it finished off the Friday session down 3.59%, which is a big move for gold. After coming up to this key Fibonacci level point in the hourly time frame, markets opened March the 1st. So markets opened here on this period here, gapped higher, came down to these lows. We had the previous hour at 1900 hours up 0.77%. And on the 1 minute time frame, obviously a little bit of a pullback we can see from here. But there we have it. So 1800 hours, just starting its consistent move. And now it's in this short-term sideways stuff. But this short-term is so much nonsense, given when you're probably watching this video so much after the fact. Silver on the 1 minute time frame, I can almost pretty much the same thing. Just starting its day down to 16.5, making it up to 16.90. That's a 40-cent move. That's over 2% in just this early movement. So the volatility of these markets is most certainly coming into play. On the daily chart for silver, we were at a situation where we managed to get to highs not seen since September the 5th. Not too many days ago, but not even fewer days ago, which was Friday. Market went to action levels not seen since August of that time frame. So it went up fast, having all of this volatility, and within it, we will see how much this will continue on, because a lot of this is going on within the coronavirus that's got big news out in mainly China, but it is a global event right now. It is most certainly been affecting these markets. If you take a look at, say, the stock market, it's been having such a huge wild session. Take a look at the futures for, and there's a big move now. Right now for the day, it's having a little bit of a rally. I wonder if it's doing the same thing. 1 minute time frame, I really can't see too much, but 1800 hours, 28.93 up to 29.59. So that's a differential of that's over 2% just for the stock market. So there's been a lot of big volatility, and in the stock market, markets usually go down faster than they go up, and this was part of the usually, because we had October all the way up to February. So what part of October? Early about that. So pretty much all of October, November, December, January, and February, almost 5 months, and then it gives it back in a week. That's the nature of the S&P 500, the stock market, and all that kind of stuff. And bonds have been pretty wild too. Let me just take a look at TLT is an ETF that tracks bonds. And here's on the daily time frame, we can see how it's been breaking out over this level of resistance, but it's been breaking out at all-time highs, where before, and this I guess to me means low interest rates. And I think I heard something about the Fed announcing that they are basically be forced to lower interest rates. And you know what? I mean, it's a fiat currency set in design to create these inflationary pressures, and just a lot, especially when you as in those the market money creators, we'll call it fiat currency creators is a better term. I don't like to call fiat currency that of money. I used to when I was a kid, but and as a teenager and in my entire 20s and for some of my 30s, but the fiat currency system, to me, it's a system designed now with people understanding how it works, that it's just a matter of time. And it's been so long already. How much longer do we have, and how these things are going to play on the intermediate long term? Well, intermediate term, it's the journey towards the destination. On the destination, fiat currency to me has almost, if not no chance of survival. If I could at least, the quote unquote, I like to say that. Just like I like to say quote unquote for the best and only guarantee that I think I can state that I could put in a safe, like an asset for 5-10 years, keep it unlocked no matter what for whatever stupid game purpose. And then next thing you know, what's its value in 5-10 years? And I'd be scared as shit, basically, on fiat currency. Okay, I can stick $20,000, all these $100 bills in there. You see what they're worth in 2030 or 2025. How much value do you have? If you did that 10 years ago, 15 years ago, maybe those pieces of papers are a series or two old. Who cares? They'll still be accepted. And they'll still buy you stuff. It'll be a little less than it was in 2010, but it's still good. Silver, you had your silver in 2010. Well, it's probably worth a little less, and that's the thing about what I talk about, at least holding on to some of its value, that guaranteed worst case scenarios kind of deal, especially if you buy silver at higher prices. And right now, I believe quite the opposite. And then, but the silver would still be there. You have X amount of ounces. You've got it set up so that they're not going to tarnish because of how you've got it stored in whatever. And that's all good. And gold doesn't tarnish, so who cares about that part? And it's all good. And even if it does tarnish, it still doesn't really hurt its value that much. And then you got cryptos, and let's just assume that you put your private keys and all that stuff. You put your Nano or your Trezor wallet or your Nano Ledger wallet, or you just write those keys on a paper. You don't even need to have those kind of wallets. Just have your 20 words, or print out your private key, or write out your private key, or have the picture of that key. So many different ways of doing it. And then 10 years from now, you're going to be able to log in, and whatever amount of Bitcoin or Litecoin or Ethereum or whatever coins you have will still be there. Will they have value? Will we be able to sell them? I don't know. But I do realize, I believe that the best way is for that. And we're in a situation where whenever there could be times where getting food and miscellaneous, easy, everyday, normal to get items might become a problem, especially with the just-in-time system that we've really aggressively been using as we've moved really into the end of the 90s and this entire millennium of understanding with technology exactly how much of a particular item you're going to sell, how long it takes to produce it in the manufacturing aspect, the shipping aspect, how long it takes. All of those little fine details are so organized very well that if you have any problems within any of these aspects, within the manufacturing, the shipping or whatnot, that can cause a lot of problems within it. And well, you got to think at some point, I'll say unfortunately, that these situations are going to have to play out, but they have to, given of course that a monetary reset is going to be a groundbreaking, history-making event. And I think we're living in history right now for future history. Well, we're living in history. Bye-bye.